Hi, everybody. It's Dr. Robinson. This is the November 11th, 2023 meeting of the Money Masters Investment Club. A little bit to talk about today. I trust that you can hear me okay. It is, of course, fall everywhere, but on the East Coast, there's lots of leaves on the ground. And so outside my window, there's lots of people blowing leaves and trying to capture those little buggers, and they're making a lot of noise. But I trust that you can hear me okay. Let's go ahead and talk about what we need to talk about for the week. We'll start off with our results for the week. The results for the week weren't great, and it's not that we had a bad week or anything. It's just I had only a few days to trade. I had some issues this week. The first thing I did Monday morning when I came into the office is I busted a monitor, a very expensive monitor, and I didn't have a replacement for a day. And it took me a while to get a replacement in, and I wasn't able to trade on Monday. And then on Tuesday, I had a death in the family. And of course, that kind of ruins your whole day type of thing. So I only traded a couple of times this week, did make a little bit of money, but the ending NAV for 11/10 was 35.49. So as of right now, our NAV's at 35.49. I was hoping for a really good week this week. The market's been on a little bit of a tear, but at the end of the day, we can only do what we can do. So overall, pretty good week. For the last couple of weeks, we've done well. We're trying to take advantage. The market's kind of in flux right now. We've gone back to a low VIX. If you remember our last meeting, we talked about the VIX had been rising a little bit. There was a lot of chaos or a lot of volatility in the market. That seems to have gone away for a bit. I don't know that it's going to be sustained to the downside. I'll talk about that in a moment. There's actually something interesting I want to talk to you guys about. I'm actually going to do a video on it. I'm just trying to gather my research on it right now, trying to get the data that I want to put on the video. But I will kind of cover that just a second. But for the NAV, 35.49 is our current NAV for the club. You can see kind of what's happened over the week. I did just put a chart up on the volatility. You guys know this is the VIX. I talk about the VIX a lot. The VIX dictates how we trade, when we trade, how long we can stay in a trade, all those different parameters that we think about. Of course, a higher VIX to us is what we like. We like VIXs in the 18, 19, and 20 range. We don't like to see the VIX too low. It makes it harder to hold a trade. That's actually been true for the last week or so. It has been tough. The market gets very slow. And it's not that it's hard to stay in a trade, by the way. It's just the market moves so slow that we get impatient. And the reason we get impatient is not because we're not patient. You have to have some patience to do this job. But the problem with it is it moves so slow. There's always that possibility of a news event or somebody saying something that spikes the market in the wrong direction. We actually had an event that happened on Thursday. We'll talk about just briefly, because that's the event I want to talk about in a different video here in the next day or so. But you can see that the VIX towards the end there is all red. It's come down quite hard. So we had hit the 2250 range in the last week or two, and we're right now back down into the right around 14.17. So the VIX has spiked to 21, came down, or 22 rather, almost to 23, came back down to 14. Of course, we like a higher VIX rather than a lower VIX. But at the end of the day, we don't have any control over it. So we've had to kind of modify our charts again. Every time the VIX does a spike, we kind of go to longer charts. And then when the VIX comes down a little bit, we have to go to shorter charts. So I had to make those adjustments this week. And again, that's another reason that we didn't produce as much as we normally would, because it takes a little bit of trial and error to figure out what VIX settings or what settings we should have on our charts, our algorithms, to best handle the VIX as it is at that moment. But for the moment, the VIX has kind of come back down. I'm hoping it doesn't stay down here. I don't think it's going to stay down here again because of something that happened during the week. Now, the thing that happened during the week, it was on Thursday. It was an auction on 30-year treasuries. It could have been an anomaly, and it's very possible it was. It might have been just a one-off thing, nothing to worry about. On the other hand, it could have been significant. And when I say significant, I'm talking about something that potentially could be very damaging to the U.S. economy and to the debt crisis in America. So I'm just going to put a little teaser on here about something I'm working on. The teaser is, are we at the beginning of a death spiral? There is something that happened on Thursday in the bond market. It was on the 30-year Treasury. Now, the reason I say it's possible that it was an anomaly is because it was a 30-year Treasury, not a 10-year Treasury that kind of went haywire. The Treasury auction, and you guys know that the Treasury auctions off securities about 300 times a year. We talk about this a lot. Sometimes it's a 30-year bond, sometimes it's a 10-year note, sometimes it's a lot of times it's just the T-bills. Those are the instruments that are 1 year or less, up to 52 weeks total. So the government issues debt to cover its expenses. You guys know that the deficit has been growing under Bidenomics. So Joe Biden is real proud about his economy, but what he's not telling anybody, or what a lot of people aren't paying attention to, is the debt load of the United States is getting bigger and bigger. We've added our current deficit this year is about 1.7 trillion, which is significantly higher than it was when he took office. But it's going to get even worse in the next year or so, just from what the Treasury has already told us they're going to issue debt on. They've got another $687 billion of debt they're going to do by the end of the year. First quarter of next year, they've got another 860 billion, I think it was. Don't hold me to the number. I'm just doing that out of the seat of my pants. But the number was in the 860 billion range. So we're talking about massive levels of debt that the government is going to be issuing here in the coming months. Well, the government did a 30-year auction on Thursday, and it went horribly. Now, I'm going to explain to you because we don't do a lot with bonds. Of course, I do a lot with bonds with some of my clients, but now that most of my advisory clients are gone, I don't pay a lot of attention, and I've never really with the club talked about the bond market, how it works, and what happens, and some of the terminology we use in the bond market. But there was a couple of things that happened on Thursday that kind of are, if you think about them in the real terms, they're scary. I think we've got, based on what we saw in the bond market and based on what we're seeing with the debt load that the Treasury has announced that they need to put out over the next quarter or two, I think, in all honesty, we've got about 20 years in this country to go before we're virtually bankrupt. So the timeline is a lot sooner than I originally thought. I thought we had maybe 40 or 50 years to go before things really hit the fan type of thing, and it's a lot sooner than we expected. Now, can we stop it? Of course. Is it possibly too late? I'm kind of pessimistic about politicians. If you know me very well, I always think or always have that little saying that politics is a playground of the stupid. These are people who are unaccomplished. They don't know what they're doing. They're way above their pay grades, and they just don't understand how an economy works, and they don't understand how much debt you can actually take on and still handle in an economy. Our debt load is growing exponentially, and based on what happened on Thursday in the debt market on the 30-year bond, some really bad things are in line if, in fact, it wasn't an issue of the 30-year bond. Now, having said that, it's entirely possible that this was an anomaly just because of the 30-year bond. And I told some of the people on the call on Friday that it's entirely possible there's just no appetite in America or anywhere else for 30-year treasuries. And we call those bonds, of course. So a 30-year bond, you're basically giving the government $1,000 and they're locking up your money for 30 years. You can't get out of that trade unless you sell to some other investor. But if interest rates go up, you're going to sell at a discount. If interest rates go down, you can sell at a premium. So you can always get out of the trade potentially, but there's risk. And that risk is what we call duration risk. So the duration risk is very high on a 30-year bond, just simply because it's a 30-year bond. You've locked up your money for 30 years. So it's entirely possible that fiasco that we had on Thursday of this week was just about the 30-year bond. There's just no worldwide or global appetite for U.S. 30-year treasuries. I don't think that's the case. Now, we've got some 10-year treasury auctions coming up. This will be a better bellwether to see what happens. But what I'm going to do is I'm going to do a video on, just to prepare you, to show you what happened on Thursday and then explain to you about how we kind of measure in economic terms the impact of a bond auction. when a bond auction goes bad, and I can't tell you how bad the Thursday auction was, it was really bad. But when they go bad, the question becomes, is it because there's no appetite for any US Treasuries, or is it there's no appetite for that particular Treasury? If it's that particular Treasury, the 30-year bond, then we're probably okay for another 30 or 40 years. But we're still got a problem. That doesn't mean the problem goes away. It just means our grandchildren or great grandchildren are going to have to, go through poverty because of the stupid things we do and the stupid people we keep electing. But at the end of the day, if it was an appetite where there's no appetite, or if it was an issue where there's no appetite for, let's say, a 10-year treasury, that could speed this up by 10 or 15 years. And we could be just a decade away before we get into some real trouble. So I wanted to do that. I'm going to do that in a separate issue. By the way, I don't mean to scare anybody. It's not like we've got things to do. There's ways for us to fix it. If it is something where we see the 10-year Treasury having an impact, or nobody has an appetite for the 10-year Treasury, it would scare me as well. And that's where I start thinking we have to start doing some other things in terms of holding. We don't want to necessarily hold cash or U.S. dollars. We're going to want to hold either gold, maybe Bitcoin, or something of that nature. I'm not saying we're there yet. I'm not saying that anything like that's even on the horizon. I'm just simply saying if there's no appetite for 10-year treasuries, we've got a serious problem on the horizon, and it's coming along the pike faster than we even expect. So having said that, I'm going to do a video, probably finish it up. I'm doing the research on it today. Probably take me another day or so to get the data together that I want to do. And then I'll put that out on the website, and you can kind of view it. And again, not doing it to scare anybody. Just want you to understand where we're at in the economy, where we're at in terms of a debt. There are some people talking about, for the very first time, debt spirals. I'll talk about what a debt spiral is. It's pretty simple. A lot of people go through debt spirals. That's how they end up in bankruptcy, where they end up borrowing more, and they get into trouble they can't make their payments, so they go open up another credit card to give them some cash, take a cash advance on that credit card, and use that money to pay the payments on the previous debt. But of course, now they can't afford the new debt, and it just makes them deeper and deeper into debt. And it just gets to the point where at some point they can't pay anything. They can no longer afford food. They can no longer afford their mortgages and car payments and all these other things, and they go into bankruptcy. We as a nation are in the beginnings of that, I think. So I'll elaborate more on that in the coming days, but just thought I would let you know what's happened. And it was something significant on Thursday. Now on Friday, even after that happened on Friday, the market blew it off, completely ignored it. Bond yields did come back down a little bit. They spiked on Thursday, by the way, if I didn't mention that. Bond yields did spike on Thursday, but on Friday they kind of retraced a little bit. But I don't know that the retracement is done. So it's possible it could come back. Again, it kind of depends on what the appetite is for some of these longer-term treasuries. Now, the Fed could try, or the Treasury could try to get around this a little bit by going to some shorter treasuries, because there's a pretty good appetite for short-term treasuries. But I will tell you that even on the short end of the trade, the repo market is exhausted. Just a few months ago, we had about $3 trillion of reverse repo money available. Right now, that has been dwindled down to right around $1 trillion right now. So we've lost 2/3 of that money. And by the way, the repo market are banks where they have excess cash and they're willing to turn it over to the Treasury. So even banks right now are to the point where they don't have a lot of excess cash. So the repo market, reverse repo market, is getting thin, and if that goes, the whole thing goes. So at the end of the day, we're on the verge of some really disastrous things in the economy if we can't get them straightened out and fixed. And of course, if we rely on politicians to do it, they're just going to drive us into bankruptcy, because most of them don't understand the stuff they're doing anyway. But having said that, again, I don't mean to leave this on a downside, but at the end of the day, I just want to kind of give you an update. I am going to do a video here in the next day or so. Look out for that. And other than that, we'll see you next week on the meeting, and on Monday through Friday with our normal stuff. So have a good day. Have a good weekend.